Hello everyone. Wishing you a very good morning. Okay, so all of you all are ready for another marathon of our corporate accounting, and we are going to do consolidation of accounts today. Right. So consolidation of accounts is an important chapter that I had given, and I told you all earlier also that this is also one of the important chapters of corporate accounting. It holds a lot of weightage. It is practically also very important for us to understand consolidated accounting, because now if you see, there are corporates having different subsidiaries. The standalone statements are well understood, but consolidated statements, understanding the acquisition, the purchase consideration, everything involved with relation to any amalgamation or takeover, consolidation of accounts plays a very important role. Okay, so we as company secretaries, we are also supposed to know consolidation. We're supposed to know how to read a consolidated statement, how to understand what will be the result of acquisition or takeover at the time when a company is taking up another small subsidiary or investing into that subsidiary. So we as company secretaries need to know that. Okay, so before I begin, I just wanted to be assured that I am audible and my screen is totally visible to you all. I wanted to have that assurance. So for that, if you all can all hit the like button or just put a thumbs up, and I would know that you all are with me. Hello. Great. So the strategy for this particular lecture also remains the same. We are going to do the basic understanding of consolidation, and we are going to solve a few questions for getting a hangover of how to solve this consolidations. In consolidation, making of balance sheet or making of ledgers is not important from your exam point of view. They are more keen for understanding of the concept, and the questions are asked in that manner from the institute. So I have taken all the past exam questions and I have collaborated everything together, with your concepts, with your practical questions and past exam questions, and I have made this combined notes for that. So you have a question book separately for consolidation, like of many other chapter, and we have the solutions also separately. So you will get these notes. You have to just join on the link, WhatsApp link, which is available. You will get these notes also for marathon. You have to just download them, take a print, and it will be there with you. So as of now, you all can just pay attention, listen to me. And when I am solving, please keep a pen, paper, and calculator in your hand. At least you can also do the rough working when I am showing to you all what has to be done. Okay. So we now begin with the class. Hello everyone. So to start with consolidation of accounts, one more important marathon for your corporate accounting paper, which carries weightage of good 12 marks. Okay, at least 7 to 12 marks in each paper. Consolidation is a must question asked. And trust me, from exam point of view, this particular chapter is very, very simple. You have to just understand the treatment of each subsidiary item which we do, which I am going to explain you all from the basics. So even if you all have not studied this chapter, you all don't know anything what has to be done, after my lecture, after my marathon, you will be able to solve the past exam questions by yourself. Okay. So I am Fatema Kagalwala and I have been teaching these practical papers as my favorite papers over past 8 years now, and I am striving to make you all study in a way that you all get exemptions in this paper, score well, and that is what is my motive over here. Hence I am sharing you all my notes and the way I have written things. So for you all it is like a guidance as to how you are supposed to write the papers, how things are expected by the institute, how the marks are being given. Okay, so talking about consolidation of accounts. Okay, so beginning with that, consolidation basically, okay, it is nothing but it is like adding the two balance sheets. Okay, consolidating the two P&Ls and consolidating the two balance sheet and giving a consolidated figure of two companies. Okay, so wherever there are two companies involved and there is a relationship between that company of holding and subsidiary, it is only then when consolidation of accounts takes place. Okay, there is a relationship of holding and subsidiary. Now, as per your Companies Act, what is a holding company? It is a company which has a control over the board of directors of other company, or it has 50%, more than 50% stake, means I'm at least 51. More than 50% means what? At least 51% stake in another company. So then it will become a holding company. Okay. So that company which has more than 50% stake, it can be 51 until it can be a wholly owned subsidiary up to 100. All the shares of a given company can be only one shareholder of that particular shares, and hence it can be a wholly owned subsidiary also. So if there is more than 50% of shares, it will be a holding company and the other one will be the subsidiary company. Okay. Now in consolidation, you keep yourself in place of holding company. Okay. Always think from the point of view of holding company. Think your boss, you are kind of taking over a small company. So there is one small company under you. Okay, so we are holding company. So everything which we will read and every adjustment which we will have to do, we will do considering ourselves as holding. If you will do this, no, I always give you all this kind of a hint whenever I'm taking my class, that from which point of view you are supposed to think. Why? Because your journal entries, your adjustments, what accounting treatment you are going to carry, it makes a whole lot of difference when you know what you are, because you have to think that way. You will be passing your journal entries with that point of view, what is coming in, what is going out. Okay, so that is why I'm saying keep yourself as a holding company. Now, why so much about consolidation, why institute gives us so much of importance with this chapter, is that they want us to understand that whenever this relationship of holding and subsidiary comes up, it does not come free of cost, right? If I am today trying to acquire another company, I will have to pay that company. So say there is a holding company and they want to buy the subsidiary company. So before buying, I will say that, okay, let us understand how much worth is this subsidiary. Is it even worth? And if it is worth, then what is the worth of this particular subsidiary? So when we calculated, we came to know it is 100 crores. Okay. So now we are doing negotiations, the holding company. We are saying that we want to buy shares in your company. Your worth is 100 crores. We are ready to pay you 120 crores. So for holding company, the cost, the purchase consideration is more than the net worth. Hence, I can say that this 20 crores extra which I paid, worth was 100, but I have paid 120. So this 20 extra which I have paid is, I can say, I have paid towards the goodwill of this subsidiary. It is kind of paid extra. It is like a loss. Okay, it is like a capital loss, but I cannot show it as a loss. No, I cannot write loss. I will say I have paid extra towards the goodwill. Goodwill is nothing but a notional loss. Practically, if you see anywhere, wherever goodwill is written in the balance sheets, is nothing but a notional loss. Okay, it actually has no money in it. It is just being there in the balance sheet because it is not written off over the period of years. Generally, goodwill has to be written off with the help of any capital reserve available with you. Okay, so if the holding company has any capital reserve, to that extent goodwill can be written off, because even capital reserve is kind of like that. So we can just write off the goodwill. So in a balance sheet, you will never always see goodwill and capital reserve both at the same time. It will be a very, very rare occasion. There can be only goodwill or there can be only capital reserve, because accounting principle says that if you are having capital reserve, you can write off the goodwill. Okay. So this was one scenario where the holding company is paying more money as compared to the worth of the subsidiary. There can be another scenario where your worth is 100 crores, but I am buying you in 80 crores. Hence, this 80, that is 20, which is there, is like a profit for the holding. I paid less, no? So for me, 20 crores is like a profit. It is a one-time profit. One-time profits we always put in the capital reserve. One-time capital profit. Okay, one-time capital profit will always go in the capital reserve. Okay, so this understanding of whether paid extra or whether paid loss is known as cost of control. Cost of control. Right. In order to acquire the control in the subsidiary company, what was the cost paid by the holding company? Okay, cost of control. So that additional or less paid or more paid will become my cost of control. Now, if it is a profit, it will become a capital reserve. But if it is a loss, that cost of control will be written as goodwill. Okay, so if it is a loss, cost of control will be nothing but goodwill. But if it is a profit, cost of control will be nothing but capital reserve. Okay, so this is the basic idea of solving any sum for holding and subsidiary related. Okay, for consolidation related, you will find everything, everywhere, all the sums are asking you what is the cost of control. Okay, now there is a way and a manner. Now it will not be given to you directly that this is the worth and this is the amount paid. They will give you balance sheet. They will tell you find the worth of the subsidiary. And based on the worth, they will also give you what is the amount paid, purchase consideration paid by the holding. Then with the help of that, we will be able to solve and give the answer. Okay, so it is that simple. Now, so what all am I supposed to take into consideration to calculate the cost of control? Okay. So now if I am telling you that holding company holds 80% stake in the subsidiary company, that means I know the ratio of the holding. Okay, so say if the subsidiary company has 100 shares, 80 shares to belong to holding itself. So the stake is given. So balance 20% are who? There are also there, no, 20% are there, no, with the subsidiary. Those shareholders are still there with them. So they are known as minority interest. Okay, important. They are known as minority interest. There are 20 shareholders here, na. 80 shares the holding company is holding, but there are 20 other shareholders worth of 20 rupees. So then obviously those are known as minority interest. Okay. Now in order to find the cost of control, whether in form of goodwill or capital reserve, we need to understand the shareholder items of the subsidiary company, because shareholders items will be forming the part of the net worth. Now if I tell you find the net worth of the subsidiary company, what you will do? You will say, assets, total of the assets minus outside liability. That is how the net worth is. Net worth generally, what is the formula? Total of all the assets minus outside liabilities. That will become your net worth. Other way for calculating the net worth is the shareholders item. Okay, now what are shareholder items? Equity share capital, reserves belonging to the shareholders, any kind of a preliminary expenses not written off. All those are the shareholders items. They belong to them. Okay, so you can consider those shareholders items for calculating the amount of the net worth of that subsidiary company. How will we calculate? We will take one thing at a time. Equity share capital. See now the particulars of subsidiary company, very important. I will take all the shareholder items, okay, of subsidiary. So I will take the share capital of subsidiary company. Share capital of the subsidiary company is always like pre. It was always there before the holding company came inside. Okay, it was always there. There is something known as pre and post. I will come to it why I am terming this. But equity share capital, you all agree, right? This capital was always there. Subsidiary company always had this capital. Then from that capital, holding company took the shares. Okay. So whatever is the ratio of holding, that will go into cost of control calculation. Balance will go for minority interest calculation. Revaluation reserves. Okay, why revaluation reserve gets created? Because in order to find the net worth, the holding company generally does revaluation of the assets of that subsidiary. Revaluate the building, revaluate the land, plant and machine, furniture and fixtures. Okay. So at that time, there can be a possibility that the assets have turned into a higher value than what they are appearing in the book. Because in the books, it is appearing for the values before 5-10 years, and again depreciation was done. But today's day, if revaluation take place, it might be more than what was appearing in the balance sheet. So any revaluation reserve will always be pre. If there is a profit in revaluation, I'll put in that revaluation reserve, right? These revaluation reserves are always free. Why? Because they belong to the assets of subsidiary company, which was there even before the holding company came in. So revaluation reserves free. Divide that between the holding and the minority interest ratio. 80% will belong to the holding and 20% will belong to the minority. Fair enough. Next is the general reserves. General reserves, if nothing is mentioned, it is again always free. If they are giving some particular dates, then we will see what has to be done. But general reserves are always again free, 80% and 20%. Preliminary expenses, free. It was always there with the subsidiary before holding company took acquisition in the shares. So it is again free, 80% holding company will bear this expense and 20% minority interest. Then we come to one of the very important point, which is profit and loss. So profit and loss can be pre and can be post. Okay, if it is pre, you blindly divide 80%, 20% and you give this 80% for cost of control of holding and 20% will go in minority. But if it is post, that means holding company has already acquired and after that that profit was earned, then I do not need to take that profit for calculation of cost of control. I already acquired, I have already come in this company, and after that I have earned profit. It is like a regular course of business. So I will take that profit in my P&L account, like how we take other profits. When I'm saying I'm talking from the holding company point of view. Okay, so I don't need to calculate this profit, the post profit, for the purpose of cost of control. Okay, it is not a shareholder item, it is a regular course of business. I earn the profit and hence I'm going to take this to the P&L account on the credit side, like how we do otherwise. Minority interest holders will get their share. That will always be there. Okay, so they will get their share. Then if there is any kind of a dividend which the subsidiary companies pay, if it is pre 80% and 20%, sorry, 80%, but there will be no effect for the minority interest. They already got that dividend, no, before we came. They've already got that dividend, pre-dividend already paid to them. Again, I will not pay, but I will take my share, 80%, right? If pre-dividend is proposed and not paid, payment is not yet done. So then 80% to for cost of control and 20% we will pay the minority interest. And if it is anything which is post dividend is like any other income for me. So I will put it in my P&L account credit side. I do not need to take my share for the calculation of cost of. All right. So that is going to be the thing I have to do if the post dividend is already been like there. Okay, whether paid or whether proposed. If it is a post dividend, no effect will come in the cost of control related calculations. I will give the share of that post dividend for minority interest. It will belong to them. Okay. Now, how will I decide whether the dividend is pre-dividend, post-dividend? See, P&L and everything is very easy. They will give you this is the pre-P&L, or they will tell you this is the opening P&L, the closing P&L. So then you will come to know whether which is pre and post. For general reserves also they will give you date. That general reserve opening is so much or closing is so much. If nothing is given, general reserve is always pre. If nothing is mentioned, okay, no dates are given for general reserve, so then it is always pre. If dates are mentioned, then we will take it according to the dates. Revaluation reserve always pre. Equity share capital always pre. Preliminary expenses always pre. P&L they will tell us whether it is pre or post. What comes here a problem is dividend. How will I know it is pre-dividend? Okay, whether paid, proposed, or whether it is post-dividend. How will I come to know reading the question? Okay, you know what has to be done. If it is pre-dividend paid, pre-dividend proposed, or it is post-dividend, we know what has to be done. But how will I come to know from the question? So understand whether it is pre-dividend or whether it is post-dividend. Look at the profits date from which the dividend has to be considered. Take the date of the profit. If that profit is it is pre-dividend. If that profit from which you are giving the dividend is a post profit, it is a post dividend. Simple. Date of declaring dividend, payment of dividend, nothing. I am not going to consider those dates. It's very confusing. And it is against the accounting laws and principles. They are saying the profit which you used for giving dividend to the shareholders, take the date of that profit. Okay, if that profit is a pre, it will become a pre-dividend. If that profit is a post-profit after holding company came into our, as an holding company, came the holding company, then if it is a post, then you will consider it as a post-dividend. Okay. Now this entire story which I told about pre and post, how will I come to know? With the help of the acquisition date. So date of acquisition is a must. During this entire year, when did the holding company come into subsidiary? That is what is important. That date is important. If they have not given us the date, we will always assume it to be the first day of the financial year, 1st of April. Okay. So basically all these shareholder items which I told you, share capital plus reserves and surplus and any fictitious asset like preliminary expense and all, will minus those, and whatever is the shareholders items we will divide that between holding company and subsidiary and minority in. Okay, so all the shareholders items whichever we said, no, pre. So reserves and surplus, the ones which are pre, evaluation reserve, general reserves, a P&L, anything which is pre, we are going to take it as a shareholders items after equity share capital plus reserve minus the fictitious assets which are always okay. Fictitious asset, one example is preliminary expense. So then that total I'll divide between holding and minority. This is important for you all to know because in the sums also you don't have to make ledgers. Okay, unlike of what I teach in consolidation during my lectures, this is unlike it. I'm not going to solve any ledgers or make any balance sheet for this marathon. Why? Because it is not important from your exam point. You will see my lectures otherwise. You all know that how I have solved these sums, right? We have made ledgers, we have made investment account, minority interest account. But all that account making also is going to give you the same answer like how we are going to solve now. Okay, for us it is important to know how to solve these sums right like this because it is expected in the same way and given in the model answers of the institute. Okay, so till so far, if I am clear, I just want you all to give a thumbs up, okay, so that even I feel like interactive. Hmm? So I just want to be rest assured that you all are understanding up till now whatever we have done. Okay. I want to see more thumbs ups or likes button. Okay. Because quite a few of you all are there. I want everyone to be on the same page. Now, next concept. Okay, when holding and subsidiary come and become it's like relatives, right? Holding is holding so many shares of subsidiary. There is a relationship between them formed now. Okay, so if there is any kind of a mutual owing, what is the meaning of mutual owing? That before they became holding and subsidiary, it might be possible that they were dealing with each other. They were each other's clients. Holding must be buying goods from subsidiary, or subsidiary is buying goods from holding. That relationship might be there. Okay. So once they get into a relationship of holding and subsidiary and they become one, okay, obviously holding company will not pay to itself, no. The holding company has to receive some amount from subsidiary company, or holding company had to pay some amount to the subsidiary company before this holding subsidiary relationship came into picture. Now they became holding and subsidiary, they did investment, they acquired shares, and everything is done. So this payment or receivable becomes a mutual owing. This payable or receivable becomes a mutual owing. It will be get cancelled from the books of the company. So when a consolidated balance sheet will be made, then at that time, say trade receivables in case of holding company is showing 100 and trade payables in case of the subsidiary company is showing 100. Why? Because they have bought goods from the holding and holding has sold goods to the subsidiary. So this becoming the mutual owing will get cancelled from the books and not be written to this extent of that amount of mutual owing. If there is any mismatch in the amount, obviously least of the amount will get cancelled because there can be other owners, there can be other trade payables, there can be other trade receivables. So only to the extent of which it will be cancel it from both the books. Next is, it might happen so that holding company is having some debentures also of that subsidiary company. So basically holding company becomes a creditor of subsidiary, no? And now this is again a mutual owing after holding and subsidiary came together. So this also has to get cancelled from both the books. Okay. So if holding company is holding some debentures in the subsidiary company, after they have come together, cancel it from the books. It is a mutual owing. As per accounting principles, we will cancel it from both the books. What is the amount of cancellation? Whatever, see, cancellation is always done at the face value. Okay, whatever is the face value, say it is rupees 100 or whatever it is always done at the face value. Okay, so say debentures were issued by subsidiary company to the holding company. The face value is 70,000. But currently, the market value of that debentures is standing at 60,000. Right? So face value is more than the market value. And this liability is only getting cancelled. So like I have saved 10,000 rupees. Okay, so it becomes a profit. It will be credited to the P&L. Right? And when the face value is less than the market value, obviously it is a loss, na? Face value is less than the market value, means market value, this debentures are running into 80,000. So tomorrow if I would have sold in market, I would have got 80, na? Now I'm cancelling, means like I'm selling it to myself, I'm cancelling it. So it is a loss. And I'm cancelling it at face value and market value is much higher, then it is a loss. It will be debited to P&L. Sorry. Excuse me. Now, it can happen that they have not given you the date of any P&L or general reserve, etc. If it is not given, we will not put our heads into it. We will directly take it as pre. Okay. See, and if the acquisition is on the first day of the year, 1st April, and they are being smart, okay, they are saying profit and loss opening balance of P&L is given, and then they have given closing balance. Okay, 1st April balance, 31st March balance. So yes, 1st April balance is given, so it is pre, no? But what about this closing balance? What it will be? How can I take closing balance? Closing balance is like our entire year is got over now. So this is pre. So the post will be the current year's profit. Current year's profit will become post. Obviously, no. If I had 10 rupees already at the time of opening of the year and I'm closing it at 15 rupees, that means during the year I earned 5 rupees extra, right? Correct. So that is why it is going to be 15, like it is the current year's profit, which is 5, that will be considered as your post profit. If the acquisition is on the last day of the year, that is I came only on 31st of March, then that entire profit is going to be pre. Obviously I have come only on the last day, so whatever profits been earned before that is going to be pre. Okay. Come. Now let us read a question and then we will come back to the solution and understand the concepts. Okay, one at a time. Now like this, they will give you a question. They will tell you there is a balance sheet of A Limited and S Limited as on 31st of March 2012 they have given us. Okay, H Limited, S Limited amount. In share capital, they have authorized, issued, subscribed and paid up share capital, nothing they have mentioned. In that they are saying equity shares of rupees 100 each fully called up and paid up. So H Limited has 6 lakhs and S Limited has 2 lakhs. In reserves and surplus, they have only one, profit and loss, both 80,000. In current liabilities, only one liability, trade payables, 75,000 of H and 48,000 of S. Now coming to the asset side. In non-current assets, they have fixed assets, 5,55,000 of holding and 2,48,000 of the subsidiary. And in long-term investments, shares in S Limited at cost, 2 lakh rupees. This is important. So in the balance sheet of H Limited, in the asset side as investment is asset, right? For holding company, it's an asset. I have invested my money. I have taken shares in the subsidiary. It is an asset. So long-term investment, shares taken in S Limited, cost is 2 lakh rupees. That means the amount, the cost for which the holding company for this particular shares, taking this shares in subsidiary, has amounted to 2 lakh rupees. Okay, it is at cost. Now understand one thing. Okay, you see there is equity share capital, 2 lakhs rupees here, and there is 2 lakhs at cost over here, and they have not mentioned how many shares. They are telling me find cost of control. Okay, whether it is goodwill or whether it is capital reserve. Now this is a problem of a wholly owned subsidiary. Why wholly owned? Because if you will see the balance sheet, long term investment shares in S Limited at cost 2 lakhs, the amount is also matching. Okay, also there is shares at S, there is not, it's not written that only 1000 shares or 1500 shares. All the shares of S Limited costed them 2 lakh rupees. This is a matter of a wholly owned subsidiary. So if it is a wholly owned subsidiary, no tension. Okay, what we are going to do is, we are just going to understand that what is their net worth, and with the help of the net worth, we are going to know the cost of control. Okay, so if the holding company has an entire shares of equity shares of the subsidiary company, then what are we going to do? Then the investment cost of holding company, we will just simply subtract by the net assets, net worth. Okay, but here we will take the net assets. Why net assets? Because for paying this 2 lakhs, I took shares. Okay, so in return, I am getting to use no subsidiary company's assets, net assets. Okay, so investment paid, investment cost, okay, or purchase consideration, if I say, or investment cost is 2 lakh rupees. This is given to me. I need to find the net assets. How much I am getting in return for this 2 lakhs. 2 lakhs is the cost of investment, shares. Okay. But what am I going to get to use? What is the net worth? What is the net asset for this wholly owned subsidiary? Then in that case, I'll take total of the assets of the subsidiary, total assets. What are the total assets? 2,48,000. Simply, I will subtract outside liabilities, which is 48. Okay, 48,000 I will subtract. Outside liabilities is only one, this one liability. So it becomes 2,48,000 minus 48,000, it became 2 lakh rupees. Correct? So this 2 lakhs is my net assets. 2 lakhs I have paid for that investment. 2 lakhs minus 2 lakhs, nil. So there is no profit, no loss. If in case there was any profit or loss, then I would have taken it as a goodwill or a capital reserve. Okay, this is a different type of a sum. Because it is a wholly owned subsidiary, I will take my net assets into consideration. What is my net assets? Total of the assets of the subsidiary, this total. Okay, this main total minus the outside liability will become the net assets of this subsidiary. That I will compare with the investment cost paid. If I get anything which is more or less, that will decide whether it is a goodwill or capital reserve. So there is nothing, there is no difference. So there is no profit, no loss, hence there is no goodwill or there is no capital reserve accordingly. So basically, like your cost of control, which they are asking, is nil. Okay. So this was one sum of wholly owned subsidiary. Very rare chances they may ask you. If they ask you, it will be for 3 marks. Okay. Now coming to the main important question. We are going to understand a lot of things with the help of this question. Okay, so pay attention. There's everything which we are going to solve in this. Okay, this pre, post and all. This is not a wholly owned subsidiary. This is a normal subsidiary and holding. So share capital. Shares of rupees 100 each. Holding company has 5 lakhs and subsidiary company has 2 lakhs. This is the balance sheet as on 31st of March 2007. They have told me general reserves as on 1st April 2006. Okay, so starting of the year. It was 1 lakh of holding and 1 lakh of subsidiary. Profit and loss 1 lakh 40 90, bills payable 40, creditors 80 and 50. In the asset side, they both have goodwill 40,000, 30,000. Other fixed assets 3 lakh 60, 2 lakh 20. Now you see this 1500 shares in S Limited at cost. Cost means what? This is the purchase consideration paid by the holding to the subsidiary to acquire 1500 shares in subsidiary. Lakh 40. Stock 1 lakh 75,000, debtors 20,000, 75,000, cash at bank 60,000, 40,000. Okay, so this makes it 4 lakh 40,000. They are telling me now in the adjustments, the P&L of S Limited showed a balance of 50,000 on 1st of April 2006. We are supposed to find the cost of control and minority. Okay. So there are two important things, general reserve and P&L, for which they have also given me the dates. So I have to be very careful whether I am considering it pre or post. Only that will help me to divide it properly and take it for cost of control and for minority. Okay, so first I have written some working notes. Okay, answer sheet. I have given you all everything. They have not told me no the date of acquisition. I told you if they have not given you the date of acquisition, no, then assume it to be the first day of that financial. So balance sheet is of 31st March 2007. Assume it that you came in holding company, took acquisition on 1st of April 2000 and start of the financial year. Okay. Now how many shares have been acquired by holding? 1500. Correct. How many total shares does subsidiary have? Subsidiary has 2 lakhs rupees in shares. Divide that by 100. Okay, so basically they have 2000 shares. From 2000, 1500 shares is belonging to the holding company. What is the ratio? 1500 divided by 1000, 75%. Divided by 2000. 75% is the ratio of the holding. So balance 25 will be my minority, right? Now to find the cost of control, I am supposed to take up all the shareholders items of the subsidiary company. Okay, investment cost is already given to me. I know what is the price paid, 2 lakh 40. But I need to treat the shareholders items of the subsidiary company. Which are the shareholders items? 2 lakhs equity share capital, general reserve and profit and loss account. That's it. Is there any fictitious asset? No. So only these three items I have to kind of, solve them in order to find the cost of control. Starting with equity share capital. 2 lakh rupees. I told you equity share capital is always. So holding company share 1 lakh 50 will go for cost of control and minority interest share will be here. Okay. Taking us now. General reserve. General reserve, they have given me 60 and they have given me the date also. 1st of April 2006. So basically, I also came on 1st of April 2006 and this general reserve was already existing. 60,000 rupees. So general reserve is pre. So 75% share of the holding. That is 45,000. I will take it for calculating the cost of control. Balance 15,000 minority interest will get their share. And now the last item, P&L of the subsidiary company. For that they have given me two figures. 90,000 is already appearing in the balance sheet. It is on 31st of March 2007. And they have given me the opening also. Opening 1st of April 2006 is okay. So I'm going to write both these figures. 1st of April 2006 50 and then closing balance as of per on balance sheet is 90,000. Okay, now make the timeline. Starting from 1st of April till 31st of March. 1st April 50,000 pre, simple, no? I came also on that day, it was already there 50,000. It's a pre-profit. Pre-profit divide minority and the holding company share 75% and 25%. This will go in the cost of control calculation, share of holding company in the pre-profit. What will be the post-profit? This is not post. This is not post. This is the closing balance. Post will be always current year's profit. Okay, current year's profit is always the post profit. So post profit from 50 I reach to 90. That means I must have earned 40,000 during the year, current year. Correct? Closing minus opening. That will give you my current year's profit. Closing is 90, opening is 50. So I'm going to get 40,000 as my current year's profit. That is post. If it is a post profit, we treat it as a regular profit in our course of business. I don't have to take that to my cost of control. So my share of 75%, 30,000 rupees, has nothing to do with my cost of control. I've just calculated. But yes, minority interest will get their 25% share, that is 10,000. So minority interest will get 12,500 plus 10,000. So total is going to be 22,500 share in P&L for minority interest. Okay, so now cost of control is very easy. Cost of control is investment amount paid, or you can say purchase consideration paid or cost paid. Okay, minus shares in net assets or shareholders items, share in the shareholders item. What are my shareholders items? Equity share capital calculated, general reserve share we calculated, and P&L share we calculated. Share of the holding company to the extent of 75%. Investment amount paid. Okay, cost 2,40,000. Subtract all this from 2,40,000. So we paid 2,40,000. In return, we got share in equity share capital. We also got share in the general reserve, and 2,40,000 minus 45,000 minus 37,500. 7,500 we have paid extra. We are getting a positive figure. We have paid more. Okay, we have paid more than what we have got in return as shareholders items. 7,500 is the cost of control in form of, and minority interest, just add everything. Minority interest, share in equity share capital, their share in general reserve, their share in P&L, both pre and post. Okay, this one is pre, one is post. So total 87,500 will be the amount of minority interest. Okay, so if you have seen my lectures, I must have solved the ledgers. I have then taken those amounts to the balance sheet, etc. But this is how the institute is solving the sum when they are giving you this type of questions for 5 marks. Okay, so this is all you have to. That's it. Okay. Now question number 3. We are done with question number 2, right? Now coming to question number 3. Same sum. A little bit here and there. They have given me balance sheet of X Limited on 31st of March 2005. Okay, 12,000 shares of rupees 10 each, 1,20,000, general reserve 25, P&L of 12, trade creditors 50. Asset freehold premise, plant and machinery, shares in the subsidiary company at cost. How many shares? 2,000 shares in 10 rupees. So that means X Limited is the holding company. So this shareholder item of holding company for me, I do not need that. Okay. What is important from this balance sheet? This 25,000 or 20,000 shares. 1,000 into 10. Stock at cost, trade debtors, bank balance. Y Limited is now my subsidiary company. I'm interested in the shareholder items of the subsidiary, which is equity share capital 30,000. General reserve on 1st of April 2004, just correct this. Okay, 6,000 rupees. Profit and loss 9,000. Trade creditors 5,000. Leasehold property, plant and machinery, stock debtors, bank and. For me, this three shareholder items is important. As on the date of the acquisition of X Limited of its holding of 2000 shares in Y Limited, the latter company, that means Y, had a credit balance of 6,000 in the PL. That means as on the date of acquisition, that means on 1st of April 2004, the opening balance of P&L was 6,000. Of which company? Of Y Limited. That is the subsidiary company. So I have to take care because this will become pre. No date is given. I will assume the date of acquisition as 1st of April 2004. Okay, 1st of April. Find out the ratio of holding company. How many shares is the holding company taken? 2000. Right? 2000 shares they have told. Out of how many shares does the subsidiary company actually have? Only 3,000. So the share ratio is 2/3, 1/3. I've kept it 2/3, 1/3 because percentage is coming in decimal. Okay, now consider the shareholders items of of the subsidiary company, that is Y Limited, to calculate the cost of control. Only three shareholders items again: equity share capital, general reserve, and PL. Okay, equity share capital is always free. So this 30,000 divide 2/3, 1/3. Okay, 2/3 and 1/3. So this will go in cost of control 20,000 and 10,000. General reserve, they have already told me it is as on 1st of April 2004. Holding company I also came on that same date. So obviously this general reserve is free only, no? It was there. 6,000. So holding company share will go in cost of control, that is 2/3 is 4,000 and 1/3 will go for the minority. P&L of Y Limited, they are telling on 1st of April it was 6,000. And when I see my balance sheet, it is closing at 9,000. So 9,000 it is closing. And 1st April it is opening. So this is going to be pre, no doubt, the 1st April one. Okay, pre. So pre 2/3 and 1/3. 1/3 is for minority interest, but 2/3 will go for the calculation of cost of control for the holding limited share, holding company share. And current year's profit, which is closing minus opening, 9,000 minus 6,000, 3,000 will go as a post profit. Holding company share 1,000, minority interest share 1,000. But this 2,000 I will not take in cost of control. This is a post profit. Anything which is post has nothing to do with the cost of control. This already I have come in the business and started earning this profit. So this will go in the normal P&L credit side of the holding. But yes, minority interest, it will be both these figures. Okay, pre 2,000 for minority and for post minority interest are going to get 1,000. So cost of control is investment paid minus share in the net assets or shareholder items. Okay. So cost of control, amount paid is 25,000. Investment, okay, purchase consideration, this is given to us in the balance sheet. See the balance sheet of X Limited. See, 25,000 is the cost of the investment. For that investment, we got in return capital to the extent of 20, general reserve we got to the extent of 4, and P&L only 4. Only this I will consider, no? The pre one. So minus everything, you are going to get from 25,000. If you are going to minus 28,000, it is like kind of a negative. So your paid is less than what you're getting in return. Automatically this will become capital. Okay, so cost of control here is in the form of capital reserve, and for minority interest we will add everything. share in equity share capital, in general reserve, pre P&L and post P. Okay. So this was with question number 3. Alright. Now we will do question number 4. Again, calculate the amount of cost of control and minority interest. Okay, Vipul Limited and Vedika Limited, there are two companies. Equity shares of rupees 10 each fully paid up. Vipul has 10 lakhs, Vedika has 2 lakhs. General reserve in Vipul is 3 lakh 10, nil. P&L 1 lakh 50, 40. Creditors 2 lakh 13. So total they have given 1 lakh 90 and 3 lakh 9. In assets 1 lakh 62 and 1 lakh 80. 70% shares in Vedika Limited at cost. They have already calculated 70% and given it to me. 1,42,000 is this purchase consideration. Current assets 3,86,000, 1,24,000. Discount on the issue of shares. Fictitious asset shareholder item 5,000. Only in Vedika. Okay, so basically Vipul is the holding company. Vedika is the subsidiary company. On 31st of December 2011, Vipul Limited acquired the shares in Vedika Limited. On 1st April 2011, Vedika Limited's P&L account showed a debit balance of 8,000. On 31st March 2012, Vedika Limited decided to reevaluate its fixed assets at 2 lakh, find the amount of cost of control and minority. Very interesting. Here they have given you the date of acquisition. On 31st of December, Vipul Limited acquired the shares in Vedika Limited. Okay. On 1st of April 2011, and here it is 31st of March 2012. This is my financial year, and in December, 31st December 2011, I have come into the picture and acquired shares in Vedika. Holding company has acquired on this date. Okay, so date of acquisition 31st of December. It is a little tricky sum, but it is a good question. Okay, try to understand. I'm explaining everything two times. Now, holding company share 70 and 30. Minority interest will be the balance, no, given to me. I will start treating the shareholder items of the subsidiary. What are the shareholder items of the subsidiary? Equity share capital, general reserve is not there only. P&L. And last is the discount on issue of fictitious asset. Okay, so let us treat this item. Equity share capital's amount is 2 lakhs of the subsidiary. I will divide that between holding and minority because that I will take into the consideration for cost of control. 70% and 30%. It is always pre. So anything which is pre has everything to do with the cost of 1,40,000. Revaluation reserve always pre. How did I get this revaluation reserve? They have given me. Vedika Limited decided to reevaluate fixed assets at rupees 2 lakhs. So fixed assets were standing at 1,80,000. I revalued it and made it 2 lakhs. That means 20,000 is the revaluation profit. Now my assets are going to be shown at 2 lakhs instead of 1,80,000. So this 20,000 profit will go as a revaluation reserve. Revaluation reserve is always pre. Though I did the revaluation on 31st of March, that is at the end of the year. But it will always be pre because it is for those assets which were existing with the subsidiary for holding company acquired share. Okay, so it will always be pre. For revaluation reserve, don't think anything, don't see any dates. It is always pre, 20,000. By 22 lakhs now the value will become, balance sheet value is 1,80,000. Okay, so 20,000 is the profit. Divide between holding company and minority interest. Take this in the cost of control for holdings. 70% will be 1,40,000. Minority interest will be 1,000. Discount on issue of shares is a fictitious asset. Okay. So like how I am taking my share in the profits, I'll have to take the share even in the loss. Like a loss. Discount on issue of shares, fictitious asset, 5,000 rupees. So holding company and minority interest, 70% and 30%. So I will debit, means like until now like this was profit, was credit. Now this is like a loss, 3,500 and 1,500 for minority interest. Okay, 70% and 30%. Now coming to the main item, which is P&L. Okay. P&L on 1st of April of Vedika showed a debit balance, means a loss of 8,000, and they are closing at what? P&L 40 profit. It is appearing in the liability side under the form of reserves. That means this is profit. Okay. So giving the timeline, 1st of April 2011 till 31st of March 2012. On 1st April, 8,000 loss, it is given to me. Okay, and this 8,000 will be pre because it stands on 1st of April. Anything which is pre has to go for my cost of control calculation. Fine. Okay, and 40,000 it is at the end of the year, 31st of December. So you all know how to calculate current year's profit. No, current year's profit, now we are already doing this. It is closing minus opening. Closing in the balance sheet is 40,000. Minus opening is minus 8,000. 8,000 is loss, no? So minus 8,000. So minus and minus plus, current year's profit is 48,000. Obviously, if I am closing at 40 and I had opened at negative 8, I must have written off, no, this negative 8. From negative 8 till positive 8 I must have come. Only then I am closing at 40,000, na? So I must have earned 48,000 profit of the current year. Then only closing can be 40. So closing minus opening, 40,000 minus 8,000. So 48,000 is my current year's profit. Until now, my current year's profit, I was considering it at post. Why post? Because I was coming on the first day of the year over here. So the entire thing was post. But no, in this sum, it is different. They are saying we have acquired shares on 31st of December. So it's like as good as 1st January. So there is a time ratio involved now. Time ratio 9 months pre 1st April to 31st December. 9 months it will be pre and balance only 3 months will be post. So this current year's profit, no, which is 48,000, that entire cannot be post. It has to be now divided in the time ratio of 9:3:1. 36,000 will be pre and 12,000 will now be post. Okay. So for post there is no worry, but for pre, 36,000 out of that 48,000 current year's 48,000 rupees profit. From that 36,000 is pre. I already had 8,000 negative pre. So my net pre-profit, net pre-profit, total pre-profit actually will be what? Actual pre plus the current year's pre. Okay, so 8,000 and 36,000. Since 8,000 was loss, I'll subtract it. So my net pre-profit is 20. So I am not going to take that 8,000 and divide between holding and minority. No. I will first try to calculate the current year's profit because there is a time ratio involved. And that pre 31st December until then I came. That entire current year's profit will be pre. 36 minus 8, 28,000 will be my pre-profit. Divide that between the holding and minority, 70% and 30%. And we are going to take this as a cost of control calculation. And yes, minority interest holders, they will get their share 8,400. And in the post profit also they will get their share. No, post profit is only 12. From 48,000 current year's profit, 48,000, if I divide that, okay, divide that by 4, 12,000 rupees. Ratio is what? 9:3. That means the ratio is, I'll even do this and show it. The ratio is basically 3:1, no? 3s are 9, 3 1s are 3. The ratio is 3:1. So total profit is 48,000, no? 48,000 into 3 divided by 4 be my pre-profit. Pre-profit 48,000, divide that by 4 into 3, 36. 3 plus 1, the ratio I am taking, okay? And that one part is going to be 12,000. 48,000 into 1 divided by 4. 12,000 will be the post-profit. Post-profit, even holding company will get its share. That is 8,400 to the extent of 70%. But it has nothing to do with the cost of control. It will go in the regular P&L account on the credit side. Okay, and minority interest share will be 3,000. So now for my cost of control, investment amount paid, that is purchase consideration, this is given to us in the balance sheet in the investment section, 1,42,000. From there, share in the capital, subtract, share in the P&L, I will subtract. P&L will be how much total? 19,600, okay? For the cost of control calculation, 19,600. Okay. Revaluation reserves, that share also will get subtracted. And discount on issue of shares. When all this profit related I am subtracting from my purchase consideration, this is like my loss. I will add it back. It's like my cost. I will add it back. Right? Discount on shares is like a loss or a cost. Profits I am subtracting from my amount paid. And loss I will have to add back. So if you will see, no, you are going to get, add all this 1,40,000 plus 19,600 plus 14,000. Okay. Subtract that from 1,42,000 and then again subtract 3,000. 28,100 is going to be your capital reserve. That is your cost of control. Don't get confused, okay, over here. Whatever amount I have paid to my subsidiary, I am taking that total amount and I am subtracting whatever I am getting in return to find the cost of control. I am getting in return 1,40,000 for share, 19,600 in P&L. I am getting 14,000 of share in my revaluation. Only this 3,500 here is different. We are adding back. Why? Because it is a loss. It's a discount on issue of share. So you can just do 1,40,000 plus 3,500 first, then subtract 1,40,000, then subtract 19,600, then subtract 14,000. You will get 28,100. You don't do miscalculation over here. And minority interest, add all the share of the minority. We have 60,000 in share capital. We have 6,000 they are taking from revaluation reserve. They will also have to bear this loss of 1,500 and they are taking total 8,400 plus 3,600 P&L. 8,400 plus 3,600, 6,000, 60,000. This you will minus because this is a loss. They will have to bear this loss. So 76,500 will be minority interest. Okay, I hope this question also everybody has got it. It is clear. Okay. Now, before I start my past exam questions, I would just like to take 1 minute pause and break. You all can just go through whatever we have until now just done. and then we do the past exam question. Just take a 1 minute, we'll just take a 1 minute break. So we did like question number. Okay, only one small correction is there in question number 1. In the question, please remove this 80,000. 80,000 only the H Limited has it as that P&L. There is nothing in the amount of S Limited. Okay, so just remove that 80,000. It is a misprint, right? So we did question number 1, we did 2, 3 and 4. Now we have to start with the past exam question. Start it like in a minute. Until then, just go through. Okay, like even in case you all have written some notes or done something, just go through it, and then you all are ready, just put the thumbs up button. Okay, we can start solving the past exam questions, and trust me, they are like this only, simple. You all have understood the concept of calculating the share of holding company for cost of control. Nothing can be difficult. Okay. So clear so far? Anything understood? Now, past exam questions is going to boost our confidence, because now you all will know, yes, we can solve it. So let's begin. You will read the question slowly. There is a summarized balance sheet of H Limited and S Limited as on 31st of March. Shares of rupees 10 each. Okay, this is like what? 1 CR, 20 lakhs. Reserves 16 lakhs, 6 lakhs, PNL 12 lakhs, 8 lakhs. Total of the asset side, liability side is 1 crore 20 lakhs, and here it is 34. In assets, we have sundry assets of 1 CR and 34 lakhs. Equity shares in S Limited, 1,60,000 shares. Purchase consideration paid, the cost is 28. Total 1 crore 28 lakhs and 34. So simple, like they have just given 1-2 items. Okay. Now S Limited had reserves of rupees 6 lakhs. S Limited, subsidiary company, when H Limited acquired shares in S Limited. But P&L balance was fully earned after the purchase of H. So basically, this they are saying that it was before, na? So this is pre. And whatever P&L balance you see, whatever P&L balance you seeing over here, 8 lakh rupees, was after holding company came. So this is post. This is pre. S Limited to decided to issue bonus shares out of the post acquisition profits in ratio of 1 share for every 5 shares. It's a favorite question of the institute. Okay, calculate the cost of control before the issue of bonus and after the issue of bonus. What will be the journal entry passed in the books of S Limited and H Limited for issue of the bonus shares by S Limited? Okay, now remember one thing, S Limited is giving bonus. Okay, bonus is given to the shareholders. One of the shareholder is holding company. Okay, so the shares of the holding company will increase to the extent of the bonus, right? Okay, so understand this. What they have given me, they are telling me holding company is having 1,60,000 shares in S Limited. How many total shares are there in S Limited? If the share value is 10 rupees each, 20 lakh shares, that means there are 2 lakh shares. So out of 2 lakh, 1,60,000 to belongs to the holding. So what is the ratio? 16 upon 20 divided into 100, 80% holding company share. Minority interest will be the balance, 20%. Now calculate the cost of control before the bonus share. Okay. Particulars and amount. What is the amount of consideration paid? It is given to me in the balance sheet. See, 28 lakhs. H Limited paid to S Limited, 28 lakhs. In return, I will take the shareholders items. What are the shareholders items? One is equity share capital and one is reserve. Only these two are pre. P&L is post. Thing has to be done in the cost of control. So share in equity share capital will be how much? To the extent of 80% of 20 lakhs. 80%, no? 16 lakhs. Yes, 16, 1,60,000 shares. And in the reserves, 80% of 6 lakhs. What is the reserve? Lakhs. Even that I will take to the extent of 80%. 4,80,000. So cost of control is coming in form of a goodwill. We paid 28 lakhs and in return we got only 6 lakhs in form of shares, in form of capital, and we got 4,80,000 in form of reserve. So 7,20,000 is the goodwill. Okay, they have given general reserve of 6 lakhs is as on the date of acquisition. Since it is on the date of acquisition, it is a pre-profit. It will be taken for the cost of control calculation. So before the issue of the bonus, it is this. But after the issue of the bonus, what will happen? What is the bonus? What the bonus will do? It will kind of reduce the capital, reduce the reserve. They are saying no, that this bonus is given from the post acquisition profits. That means they are using the P&L profits to give this bonus. So the amount in this profit of the subsidiary company will reduce and the shares of the holding company will increase. Even subsidiary company shares will increase only, because of the bonus. What is the bonus ratio? 1 share for every 5 shares held. So let us remove the ratio. Bonus is given in the ratio. If you are having 5 shares, we are going to give you 1 bonus share. How many total shares does the holding company have? 1,60,000. Holding company also will get this bonus. So 1,60,000 they already are having. So what will be the number of bonus shares given? 1,60,000 shares into 1 divided by 5. 32,000 shares they will get at bonus. Share value is 10 rupees each. That means 3,20,000 will increase in the share capital. Correct. So amount paid, consideration given, equity share capital to the extent of 80%. Same thing, 16 lakh rupees. Then in the reserve, 4,80,000, that will also remain the same. Just copy paste from what you did previously. But we got bonus shares also now. So bonus shares of 3,20,000 we will subtract. So now our cost of control, or which is get in the form of goodwill, is 4 lakh rupees. Okay, it is 4 lakh rupees. Simple, no? In case of the holding company, to find the cost of control, we are also getting the bonus. So I just calculated that much part. Okay, for bonus, we had 5. For every 5, we are going to give 1. I am having 60,000 shares, okay, of the whole subsidiary company. So I am going to get 32,000 shares as bonus. What is the value of 1 share? 10. So 3,20,000 more in my share capital will increase that extent. So I will take that for the calculation of the cost of control, because share capital is always pre. So now my cost of control or goodwill is 4 lakhs. Initially it was 7,20,000. Right. Now journal entries. Okay. In the books of S Limited. S Limited gave bonus. For giving the bonus, what did they use? They have used the P&L account. From that P&L, they have lot of money in the P&L. Okay. S Limited has lot of money in the P&L. This is the post profit, 8 lakh rupees. So from 8 lakh rupees, they are giving this bonus. Right. So it will be what? P&L account will get debited. How much? 4 lakhs. How? Held to bonus. Actually, number of shares currently, subsidiary has got 2 lakh shares. Right. So bonus will be of how much? 2 lakhs. Divide by 5. They will have to give to all these 2 lakh shareholders, na? How much? 40,000 will be my bonus. Bonus shares. What is the value of each share? 10 rupees. Therefore 4 lakhs. Okay. So P&L account will get debited by 4 lakhs to equity share capital 4 lakhs. So P&L will get reduced, share capital will get increased. This will be the journal entry. And there will be no journal entry in the book of H Limited. H Limited is not doing bonus. Okay, S Limited is doing bonus. So there is no journal entry in the books of H. Okay, so this was like kind of good 8-mark question. Okay, so done. Question number 1. Now coming to question number 2, past exam. Okay, they are saying balance sheet of S Limited only, they have given it to me. Share capital rupees 10 each fully paid up. That means they are having 60,000 shares. General reserve 1,50,000. P&L 1,05,000. Creditors is 1,80,000. And in assets there is fixed assets and current assets. Holding company, which is H Limited, has brought 48,000 shares in subsidiary. So that means out of 60,000, 48,000 is taken by 8. So I can find the ratio. Consideration paid for the purchase of the shares is 9 lakh. General reserve on the date of acquisition is 1,20,000. That means it is pre. And profit and loss account on the date of acquisition, again pre. Find minority interest and goodwill amount. How will goodwill be treated in the consolidated books? Very easy. From 60,000, if holding company is having 48,000, percentage of holding is 80% and 20%. I will start taking the share of minority interest to the extent of 20%, right? Of all the shareholder items. What are the shareholder items? All this. Share capital, general reserve and P&L. Okay. So share capital 6 lakhs into 20%. Okay. General reserve 1,50,000 into 20%. And P&L 1,05,000 into 20%. Or else you can just do the total and take it 20 as you like. So share into the minority interest will be 1,71,000. Lakhs plus 1,50,000 plus 1,70,000. You can do the total of all three, total, and directly take 20%. Okay. Now working note for general reserve. For general reserve, date of acquisition is assumed to be the first date. Okay, as on the date of acquisition, it was 1,20,000. Now, okay, so opening is 1,20,000. Now, closing of general reserve is 1,50,000. So, from this opening till closing, right? Opening will be considered to be totally as pre. Why? Because the date of acquisition is also 1st of April. Right? So, this will be considered totally pre. So, I'll take 80% and 20%. 96,000 will be the holding company share, that I'll take it in the cost of from this 1,20,000. Okay, 1,20,000 into 80, 96. But when I'm closing at 1,50,000, the entire current year's profit will be post. Okay, because that is what I have earned during the year, na. So 30,000 will be current year, which is post. So the share to the extent of 80,000, 80% of 30,000. Okay, this is what, like 24,000. This has nothing to do with my cost of control. Yes, minority interest shareholders will get 20%. Okay, they will get 20%. So for minority interest, I have directly taken it 20%. I have already taken it only pre and post thing I have done. So if you will see this, it will be 24,000 plus 6,000. Which is how much? 3,000. Okay, which is 30,000 here. See. Okay, and in case of P&L also I'll have to do the same thing. Since the balance sheet figures, okay, and the figure given in the opening is different, we will have to do this pre and post. Okay, so try to do pre and post only, because in this case, though I have done this, okay, 20% directly, it has come the same thing. It might not even come. Will come, but try to do this pre and post related only. So opening 24,000 is there in P&L. This they have given me. And then in the closing, as per the balance sheet, they are standing at 1,05,000. Right? So opening will be pre, because the date of acquisition is 1st of April. So entire 24,000 is pre. So that pre will go as 80% for the calculation of cost of control. Okay, so from 24,000 into 80%, 19,200 will be holding company share, and it will be taken for the calculation of cost of control. And this is going to be 20% minority interest. And when I am going to close at 1,05,000, that means in the current year, we have made a profit of 81,000. How? Closing minus opening. 1,05,000 minus 20. 81,000 is my current year's profit. 80% share of the holding company, which comes to something 64,800. I have nothing to do with that cost of control. It will go in their normal P&L account credits. But yes, 20% of the holding company share, which is 81,000 into 20%, 81,000 into 20% will go 16,200 will go to the minority interest. So now if you will see minority interest again, 4,800 plus 6,200. Okay, 4,800 plus 16,200, that will come to 21,000. Okay, that will come to 21,000. Right, so minority interest I have already done, and I am also doing pre and post for the purpose of cost of control. Everything we are verifying, it is the same. So now calculating the cost of control, which is can be goodwill or it can be, okay, minority interest and goodwill they have told. That means there has to be goodwill. We have paid more than what we are getting in return. Fine. Amount of consideration paid, this is given to us. Given. Right, 9 lakh rupees, no? Right. In return, we got the share in equity share capital, 4,80,000. We got share in the pre amount of the general reserve, only pre. Only pre can be taken into consideration. So pre of general reserve was how much? 96,000. And pre of P&L was how much? 19,200. Right. So only this amounts I will take. Only the pre. Because that only can be taken for the cost of control calculation. So 96,000 minus 19,200. So from 9 lakhs minus 4,80,000 minus 96 minus 19,200, you will get 3,04,800 as a cost of control in form of goodwill. And goodwill is always shown on the asset side of the consolidated balance sheet of the holding company. Okay, consolidated balance sheet of the holding company. Yes, it is like a fictitious asset. It is a notional loss. Okay. So this was an interesting sum. Okay, question number 2. Now coming to question number 3. This sum is a little tricky. It is for more marks also. Though it is looking small, the bigger the questions, everything is given in that. Okay, so sometimes people get scared in reading the question only. They're like, ma'am, so much is there in the question that we don't know how to solve. But if you all will read the question, no, half of the answers are in the question. There are big question. Don't get scared of the size of the question. Okay. Now see this third question. Small question. Now see its solution afterwards. On 31st of March 23, H Limited has 20,000 shares out of 25,000 equity shares issued by S Limited. Okay, so S Limited actually is having 25,000 shares. Okay, from that, holding company is holding 20,000 shares. Can somebody tell me the ratio? It is 80% is there as the holding. 80% is the holding. Okay. Now H Limited acquired the shares in S Limited in the following manner. On 1st of April 22, they acquired 25%. Percentage of shares acquired. Then on 1st of October 22, they acquired 37.5%. And then on 1st of January 23, they acquired 37.5%. Okay. So 25 plus 37.5 plus 30. Perfect. 100% was then completed on 1st of January. Okay. On 31st of March 22, the balance sheet of S Limited exhibited equity share capital of rupees 2,50,000. Right, 25,000 shares they have, 10 rupees is the value. Reserve and surplus was 1,25,000 on 31st of March. During the year 22-23, net profit earned by the company was 50,000. That means current year's profit. Okay, during the year means current year. That was distributed evenly throughout the year. Amount of reserves and surplus on 31st of March 2003 stood at 1,75,000. Okay. Ascertain the share of parent company in the profits of S Limited as on the date of the acquisition. Now understand one thing. I am giving you basic understanding of holding company holds 80% of shares in the subsidiary. Okay. So basically they have acquired 20,000 shares of subsidiary. Now this 20,000 shares they have done in parts. From 20,000, 20%, 25% they acquired on 1st of April. Then 37.5%, 7,500 shares they acquired on 1st of October. And then again now remaining 7,500 they acquired on 1st of January. That is how the entire acquisition 100% was completed. Don't take 100% of the holding. They are saying this acquisition 80% has taken place in stages. Okay, so 20,000 total 100%. 20,000 got complete when 1st of 23. Okay, so that is the ratio of the percentage of shares acquired. Percentage of the holding is 80%. Okay, now first one we will solve. See, calculation of the shares of H Limited in the profits. Okay, calculation of share of H Limited, profit of S Limited as on the date of acquisition. There are different dates. 80% holding you all understood from 25,000 shares. If I am holding 20, that means I am having 80% stake in the subsidiary. Whatever is happening on 1st of April 22 now. Okay. They are saying that what is the share of the parent company in the profit of S Limited as on the date of acquisition. Okay, share of profit. And they are saying there is 1,25,000 reserves and surplus on 31st March. And profit earned during the year is 50 and reserves and surplus is 1,25,000. Okay, so on 31st of March 2020, okay, balance sheet of S Limited exhibited equity share and reserve and surplus. So on 31st March 2022 means 1st of April 2022. right? General reserve was standing at 1,25,000 reserves and surplus. Okay, then on 31st of March 2023, this reserves and surplus is standing at 1 lakh. We have to ascertain the share of H Limited in these profits. Okay, so this 50,000 they have earned during the year, right? That is what they have given. Okay, so now amount of reserves and surplus is opening. I can say this is opening, and it is also pre, right? It will be pre. 1st of April they came, 31st March was the amount. So it is pre, no? Before I came, this profit was there. Okay. Amount of shares acquired was 25% of 20,000. How many shares I acquired? 5,000. So how much amount of stake did I acquire on 1st of April? 5,000 out of 25,000 shares. No, the stake acquired is 20%. Number of shares acquired is different. Okay, I acquired 25% of the total number of acquisition. Total number of shares, which is 20,000. On 1st April, I acquired only 25% of. Okay, so from this 5,000, so the stake, if I want to calculate, currently on 1st April, my stake will be how much? 20%. So I will get only 20% of the share in the profit also on 1st of April 22 from 1,25,000, which is pre. I'm going to get 25,000. Post, remaining 50,000 was earned after 1st of April. Nothing I'm going to get at that time. On 1st of April, my share in the profit will be 25. Then I came on 1st of October, and on 1st of October again, amount of reserves and surplus is 1,25,000. Profit earned during the year is 50,000. Right? So proportionate of that profit, this 50,000 was for 12 months. So from 1st April to 1st of October, it is 6 months. So 50,000 time ratio. So this 50,000, I am going to take it proportionately for 6 months from 12. So 25,000 also will become pre. I'm doing everything for this pre-profit. 1,25,000 is the pre only because it is on the date of 31st of March 22. Right, so that is the pre only 1,25,000. But current year's profit, which is 50, which I have earned from 1st of April 22, 1st of April 22 till 31st of March 23. Okay, they have told me we have earned 50,000 and it was evenly spread throughout the year. That means for 6 months I have earned 25. So now my total share in the profits will be 1,25,000 pre plus 25,000. Okay, which is 1,50,000. This I will have to take it to the extent of my holding. So what is my holding? My holding is now on 1st of October 37.5% I acquired. 1st of October 22 I acquired more 37.5%. Of how many shares total? 20,000 I am going to acquire. From that 37.5 I did on 1st of October. I acquired 7,500. Right. So what is my holding? 1,500 divided by 25,000 total number of shares. 30%. Right. So on 1st October, I acquired 30%. I already had 50% holding. Sorry, 20% on 1st of April. On 1st of April, I already had 20% of the holding. I had acquired 5 shares out of the total 25,000 shares of subsidiary. So percentage of holding was 20. Now my percentage of holding will be 7,500. The number of shares acquired, 37.5 into 20,000. Okay, 7,500. Total number of shares in holding in subsidiary is 25. So percentage of holding acquired is 30. So 20 plus 30. Now my holding is 50. So the profit which we calculated 1,50,000. I am going to take immediately 50% of that 1,50,000, which is 75. Okay. And now the third acquisition happened on 1st of January. So reserves and surplus amount pre is 1,25,000. This is profit earned during the year. Current year's profit is 50. So basically from 1st April till 31st of December, 9 months. So it has to be 50,000 into 9 divided by 12. 37,500 will be pre. So 1,25,000 plus 37,500. 1,62,500 will be pre. This pre, I have to take the share of my holding, the extent of this pre profit, that will be my share. How will I find my holding? 37.5% shares I acquired on 1st of Jan. Okay, I had to acquire total 20,000 shares. I acquired 37.5% on 1st of Jan. 7,500 shares acquired. So now my percentage of holding will be 7,500 out of the total number of shares of subsidiary. 30%. Already I finished acquiring 20 on 1st of April. Then 1st of October I acquired another 30. And now I am going to acquire another 30%. Yes, it became 80%. See, fantastic. So now it is going to be 80%. Now we have completed. Okay, so now we will take that entire profit into 80%. That will be my share in the profit of subsidiary company. Share of H limit of the holding company in the profit of subsidiary company. It is a very, very important sum. Like chances of this. Okay, so you have to be very careful while solving this. Now question number 4. From the following details, calculate goodwill or capital reserve and minority interest that will reflect in the consolidated balance sheet. Yes, if it is a goodwill, it will reflect on the asset side. If it is capital reserve, it will reflect in the reserves and surplus side of the consolidated balance sheet. Summarize balance sheet as on 31st of March 23. Share capital value rupees 100 each, 10 lakhs, 4 lakhs. P&L 6 lakhs, 4 lakhs. General reserve only holding companies. Liabilities 9 lakh, 2 lakhs. Total 27 lakhs and 10 lakhs. Sundry assets 20 lakhs, 10 lakhs. Shares in S Limited as on 1st of April. How many shares? 3,000 out of 4,000. Cost paid 7 lakhs. Okay. Balance sheet of S Limited exhibited on 31st of March 22 was 1 lakh. Okay, profit. And it was 3,000 in general. 31st of March 22 is as good as 1st of April 22. That means they are talking about opening balance. So what is given over here? P&L 4, all that, it is closing balance, and nil. This is the closing balance. Okay. So H Limited holds 3,000 shares out of 4,000 shares. So percentage of holding is 75%. Minority interest will be 25%. Calculation of valuation of goodwill. Cost of investment is already given to us, 7 lakh rupees. I will take 75% of 4 lakhs, which is 3 lakhs rupees. Share in the P&L amount, which is pre. Okay, whatever is pre. So P&L, they have told me 1 lakh is pre. 4 lakhs is standing in the balance sheet. So 1 lakh is only pre. They have told me opening date of P&L. 75%. And share in the general reserve, 60,000. Okay, share, opening. This is the opening general reserve. So share in the general reserve is going to be 60,000 into 75% pre, no? Opening general reserve will be pre. So from 7 lakhs, I'll minus 3 lakhs, 75,000 and 45,000. My cost of control of goodwill comes to 2 lakh 80,000. And share of minority interest, they are going to get a share of 25% in the equity share capital, 25% share in the pre-PNL. How much is the pre-PNL? 1 lakh. 25% of 1 lakh. They are going to get the share of 25% in the opening general reserve, which is how much? 60,000. 1,000 into 25. 15,000. Okay. But they are also going to get share in the post PNL. Post PNL for holding company, it does not matter. It does not come in the cost of. But for minority interest, so they will get now. Okay, so how to calculate this? See, PNL. Opening given to me 1 lakh. Closing they have given me 4 lakhs. That means 3 lakh was current year's profit, that is post. Okay, 75% holding company will get cost of control. Oh, sorry, it will be 75% PNL account of the credit side. This I have done already. I'm doing only post PNL account credit side of holding. But 3 lakhs to 25%, 75,000 minority interest shareholders will get it. Okay, post PNL share. But if you see, in case of general reserve, we started with 60 and we ended up at 0. That means when I started on 1st of April, I was standing at 60,000. And then on 31st of March, this amount became 0. So what must have happened? Closing minus opening will give me current year. Closing is 0, opening is 60. So that means in current year I must have made 60,000 loss. Right? Only then my general reserve became nil, no? From profit of 60 it is showing nil. That means there must be a 60,000 loss. That is entirely post. 60,000 loss is post. Post loss has nothing to do for the cost of control. Okay, so even if I'm taking 60,000 to 75%, which is 45,000 as share of the holding company, it will go in the P&L account debit side as a normal loss. But yes, I will have to take 60,000 into 25%, which is 15,000 as the minority interest shareholder, 25%. So that will be a loss. So for minority interest shareholders, you will say, okay, so you will take, okay, I have taken over here 3 lakhs minus 60,000, the entire loss. Okay, and then I have taken it 25%. You can even do that, or you can take this 75,000 as a profit minus 15,000 as a loss. Again, you are going to get it 60,000. Okay, you are going to get it 60. Or else directly 3 lakhs post minus 60. That is also post, no? 60 is post only. 3 lakhs minus 60,000. That is the entire post. For that, the share of only 25% of the minority interest shareholder. So this both is post. So for minority interest, to directly we will take 25% of this post na, and give it to them. So 60,000 here. Okay. So 60,000. So total is going to be 1 lakh plus share in the PNL, pre-PNL, post-PNL, okay, and pre-general reserve. Okay, pre-general reserve, and you are going to get share in the post-PNL also and share in the pre-PNL. It was going to be 2 lakh rupees. Okay, pre-PNL 1 lakh, 25% of 1 lakh, this is pre-PNL. Okay, share in the pre-general reserve also. pre-general reserve, which is 60,000. They are going to get a share of 25% of that pre, and their share in the post P&L, which is 4 lakhs, from 1 lakh to 4 lakhs, 3 lakhs. And also there is a 60,000 loss I directly subtract. Or you can do post, you can also write share in the post general reserve. Pre general reserve, post general, pre P&L, post P&L. Okay, pre P&L, post P&L. Similarly, you can have it as pre general reserve, and you can write it as a post general reserve. Okay, for post general reserve, then you will have to take two different amounts. Share in the post P&L will be 75,000. Then this sum will change a little bit. Instead of 60, we'll write 75,000. And share in the post P&L or share in the post general reserve will be minus 15. Then also the answer will come the same. Whatever you all are comfortable with, you all can solve it in that manner. Okay. Now next question is about the requirements of consolidation of subsidiary, which is an LLP or partnership. You all can just go through it, read it. It is important. Okay, they have asked this for 5 marks as a note, short note. And this is your latest paper question. Coming to that, the summarized balance sheet of H Limited and S Limited as on 31st March 2025 they have given. Share capital face value is 10. H Limited has 30 lakhs, 6 lakhs, reserves 4 lakh 80, 1 lakh 80, P&L 3 lakh 60, 2 lakh 40. Sundry assets 30 lakh, 10 lakh 20, and there are 48,000 shares taken in S Limited, the purchase consideration. Okay, so out of 60,000, 48,000 belong to H. S Limited had reserves of 1,80,000 when H Limited acquired the shares in S Limited. Okay, so reserves were 1,80,000. Okay, so 1,80,000 is here, 1,80,000 is closing and open, same thing. Okay, so this is a pre-reserve. The balance, P&L balance of S Limited was fully earned after the acquisition of H. So it is post. P&L is post. Will not hit my cost of control or anything. S Limited decided to issue bonus shares of the post acquisition profit in the ratio of 1 share for every 10 shares. I'll calculate cost of control before and after bonus. I told you, no, this is their favorite question. Okay, so this is like your question number 6 answer. Same thing, cost of control before the issue of bonus share. Before the issue of the bonus share, basic purchase consideration paid, which is given, minus the shareholders items. What I am getting in shareholder item? One, I am getting equity share capital, 48,000 shares of rupees 10 each, 4 lakh 80. Right? I am getting share in my reserves. What is the percentage holding? 48,000 divided by 60,000, 80% is the 80% holding. Okay, so share in the reserves, which is pre 1,80,000. They have told me only it is before the acquisition. So 1,80,000 is pre. So I'll take holding company share to the extent of 80%. That I will remove it. So I'm going to get cost of control in form of goodwill. That is before the bonus issue, 2,60,000. Now after the bonus issue, one thing will change. Equity share capital I'm getting, but I'm going to get bonus shares also. No, now. So what is the bonus is to held ratio? If you are having 10 shares, you will get 1 share. So holding company has 60,000 shares. So they are giving how many shares as bonus? 6,000 shares as bonus. From that, holding company will get 80% because it is their holding. So 4,800 they are going to, from 6,000 they are going to get 4,800. The amount of bonus will be 48,000. 4,800 bonus shares. Right? So again same thing, amount of consideration paid given 8,40,000. Face value of the shares acquired 48,000. Why? Because initially I acquired 48,000 into 10. Share in the reserves, because they have told me my reserves is pre. Okay, so pre-reserves. So 2,16,000 I have arrived till here. Now less number of shares got in bonus. H limited share in the bonus issue. How many shares were issued in the bonus? 4,800 into 10, 48,000. So cost of control or goodwill after the bonus issue is 1 lakh 8. Okay. So this is it with your consolidation of accounts. Okay. You all also try to solve all these sums. Okay. All the important notes I have given it to you all, which is from the exam point of view, and all these were your exam questions. Okay. Even those previous ones which we solved, they were asked ever before, when there was consolidation account was always there as a part of CS syllabus. So these are all the types of questions being asked for this particular chapter. Okay. So with this, I have completed consolidation for marathon. Go ahead, revise, all the best. Try to solve all these sums in your own handwriting and in your books. You will definitely get a hang of it. You will be able to solve this even in the exam. Okay, thank you everyone. Bye. Somebody wanted me to explain the holding related, okay, percentage, 80% and 100% timeline. Hold, I am explaining it to you all once. Here, okay, in this sum, understand one thing. Understand one thing. They are telling me that holding company will hold 20,000 shares. Total shares of the subsidiary company are 25, right? So, therefore, my percentage of holding will now be 20,000. Divide that by 25,000 into 100. I am going to have 80% of holding in the subsidiary company. This understood? Simple, right? Now, this 80%, which amounts to 20,000 shares, I am not taking 20,000 shares in one go. I am taking in 3 slots. I am taking 25% first, then I'm taking 37.5% on some other date, then lastly again I'm taking 37.5%. Right, so this 20,000 shares total, I am not taking on one fine day only on 1st of April. I am doing split of the dates, 1st of April, 1st of October, and then again 1st of January. Okay, and as and when I am doing the acquisition. So this makes it total 100%. How? If I am saying that 25% of my holding, 25% of the shares which I require to acquire, okay, 20,000 I need to acquire in total. From that 20,000, 25% I am acquiring on 1st of April. Means I am acquiring only 5,000. Then I am acquiring 37.5%. That means 7,500 on 1st of October. And then on 1st of January, another 37,000. Sorry, another 7,500. If you will add 5 plus 7,500 plus 7,500, it will totally become no 20,000. So my 100% of acquisition is complete. Okay. This is for the purpose of acquisition of number of shares from the total number of shares being acquired. But when I do calculation, Okay, when I do calculation of share in the profit of subsidiary company. In that case, I will have to take the percentage of holding acquired. Okay, percentage of holding. So if on 1st of April, I am acquiring 5,000 shares, percentage of holding I can get with the total number of shares of subsidiary. So basically, I am acquiring how much stake? Similarly, on 1st of October, if I am taking 7,500, okay, out of total 25,000 shares, so I am acquiring how much stake? 30. So on 1st of October, I am actually standing on 20 plus 30, 50% stake acquired. So for share of profit, I'll have to take the percentage of stake. For the calculation of the number of shares to be acquired, this percentage is given. These are two different things. Then on the 1st of January 2023, again I had to acquire 7,500. The stake is for 25,000, no total number of. So again I acquired 30% stake. So today I am now standing on 50, previously plus 30, it became it. I hope I have cleared. To find the share of the holding company in the profits of the subsidiary company, for that the percentage of holding is very important, because I was doing that only, no, pre post, based on the percentage holding. Okay, so I hope this video and this marathon has been helpful to you all. You all can share it with your friends, okay, or just you all can comment, or you can just put a thumbs up that we are done, and then I live. Okay, everyone. I will see you all in the next marathon. Bye.